from a fundamental perspective, I think I've said this here before, things look much better than what the market would suggest. We're approaching crisis level valuations on a number of multiples presently, trading at around or just under 10 times earnings, 1.2 times book for our portfolios. Historically, these have been attractive entry points and have rewarded investors who've been prepared to be patient. But there are a lot of issues and a lot of risks confronting markets, and it's probably likely to be more of the same for a while yet, I suspect.
Geoff, that makes me think of the Chinese market. No shortage of issues there, of course, when you talk about what's going on with the domestic growth slowdown right at the same time as the trade tensions could potentially pick up with the United States. But we've heard a lot of reassuring comments coming from Beijing officials lately. Does that give you confidence that the Chinese mainland market is a buy?
Look, we look at stocks rather than the market as a whole, and there are many companies there that we would buy and are looking closely at or have bought. The Chinese authorities have been pretty adept historically at providing assistance to the market as and when it's required. You mentioned the deceleration that's occurring in China. I mean, in many respects, we think that's positive because you are seeing this rebalancing that people have called for a long time, slowing of credit relative to growth, trying to lift the share of consumption in the activity in the economy, and these things are happening. So, the chicken littles that have called, 5 of the last 2 corrections in China are obviously getting excited again, but we take a more sanguine view with respect to the fundamentals and the long-term growth that we still see in many opportunities in that market.
Hey everybody, it's Hadley Gamble from our new CNBC Middle East Bureau in Abu Dhabi. Thanks for stopping by. Now to watch more, you can try one of the videos that just popped up on your screen. And don't forget to subscribe.